Hi and welcome to the weekly market update. It's Tuesday the 21st of May 2013. Okay, relatively quiet day for markets yesterday and very quiet in terms of data. Also pretty much the same today, not too much data out. We did have German producer prices out this morning, showing a slight slowing there. And also we had the UK inflation data in terms of consumers, retail and also producer price data. All the figures coming in slightly softer than expected, so getting some slightly lower readings there out of the UK. So in terms of where we're sort of sitting now, in terms of stocks, we saw a good day for the FTSE yesterday, reaching 12-year highs, but currently trading around 67, 62 mark. We've got the Dow, also a strong day yesterday, but then ended rather flat, but today trading around 15,317. For Eurodollar, we've got it at 1.49, cable around the 1.5144. For commodities, the gold future around 1375.50. Brent, we've seen some strength in recently, and trading today around 104.12. Okay, so looking ahead to the rest of the week, tomorrow, Wednesday, we're very busy in terms of data. It's going to start off with Japan releasing their monetary policy statement. We're expecting them to sort of voice concerns over the volatility that we're seeing in their bond market at the moment. The 10-year benchmark bond has actually, the yield has doubled since their announcement on April 4th that they're going to be pumping in $1.4 trillion worth of yen into the economy in order to reach that 2% inflation target. So one of the concerns here is that this spike in yield is going to affect the rates on Japanese debt. This is actually, the Japanese debt level is expected to reach 245% of GDP this year, which will take it to the highest in the world. So definitely a concern to watch out for there, and why they're sort of assessing the situation quite closely. In terms of European data tomorrow, not too much out, just we've got European current account reading. From the UK, we've got public sector net borrowing, and also retail sales. Retail sales expected to come in slightly improved, so a bit better than expected. But we're also seeing the release of the Bank of England minutes. These are sort of expected, nothing too drastic to come out there. We're expecting a tone of a more wait and see until we get Carney in the summer, so not too much change there. The main focus is going to be on the US tomorrow. In terms of data, we've just got a bit of housing data out. We've got mortgage applications, also existing home sales better to come in slightly improved. We've got the release of the Fed minutes in the evening from the last meeting, so that's going to be quite one to watch. But it is sort of expected. We're seeing Bernanke speak his testimony tomorrow, and we're expecting that to sort of front run the minutes. People are really going to be watching out for this, really looking for signs from the Fed of where they're sort of taking their monetary policy and their fiscal policy. They're looking for signs of, there's been a lot of talk of the tapering of the QE, so really looking for signs, or maybe some signs of the signals which might mean that this tapering has started, maybe some benchmarks from Bernanke. So definitely something to watch out for there on Wednesday, and I think the markets are sort of waiting in anticipation of that this week. Into Thursday, overnight we'll see Chinese PMI manufacturing coming in, seeing a slowing in this data recently. We also get the European PMIs out in the morning. We've got your French, German and then the Eurozone reading. Expecting a slight improvement here, but still to remain in contractionary territory. Also out of Europe, we've got Italian retail sales. Then from the UK, we get a revision of that GDP reading for Q1. No change expected here. We also get a bit of like economic performance data. So we've got a private consumption, government spending, exports and imports. Then from the US, as usual, we've got the initial jobless claims, continuing claims. We also get their PMI manufacturing reading, and a bit more housing data. So we've got new home sales this time on Thursday. And then finally, to finish off on Thursday afternoon, we've got a European consumer confidence survey. And then finally, into Friday, we've got overnight from China, a business sentiment survey. I think it'd be interesting to watch out for the sentiment coming out of China. We've seen, obviously, we say weaker growth, but sort of more of a slowing of the economy. So interesting to see how this is trickling down to businesses and how it's affecting their confidence and attitude towards the picture in China. From Europe, it's mainly focused on Germany. We see a reading for their Q1 GDP as well, expected in line, and as expected, they've got also the same sort of economic performance data from the UK on Thursday. We've got imports and exports, expecting to see a better picture there, so increasing exports and falling imports. We've got the investment and also government spending readings from Germany, we've also got the IFO, which is a business sentiment survey. People are always keen to watch out for the German data, and especially the attitude in Germany as the largest economy in Europe, sort of leading the way there. So hopefully a good sign out of there for the IFO confidence. Then, as every Friday, we get the LTRO repayment, the announcement from the ECB of how much the bank's going to repay next week. It's just an ongoing reading, something to keep an eye on every week as a basis for the liquidity left in the Eurozone. And then finally from the US, we get durable goods. We're expecting a slightly better reading than last time because we've had a strengthening numbers from Boeing. The readings were negative last, and so we're hoping to go into positive territory this time. Okay, so I think all eyes watching out for tomorrow. Keep an eye out for Bernanke and exactly what he's saying, giving us any clues as to what's in store for the US. All right, that's it for this week. As usual, any feedback, very welcome. Thanks.